Hello traders and welcome back to another video of Nova Forex. So, in this video we would share the best strategy that you can use along with the order blocks concept in order to make huge profits into the market. Now before we start this video, make sure that you subscribe to our channel and hit this bell icon to never miss out on any of the upcoming videos. So, let us move into the video. Let us first learn about the order blocks concept and then we would move on to the strategy of the order blocks. So, first of all, what are order blocks? The order blocks are the optimized areas of supply and demand. In other words, the order block zones are those zones where the big players of the market, which are central banks and financial institutions, accumulate their buy or sell orders into large quantities. We must identify and plot the order block zones on our chart in order to trade like the central banks and financial institutions and earn huge profits into the market. Now let us learn how to identify and plot the order block zones on our chart. So, here we have the Euro-Australian dollar chart on 1 hour time frame. We can see that the market is doing the break of structure to the upside, which indicates that the market is in an uptrend. Now for our order block zone to be valid, we must wait for the market to make these 4 confirmations. The first confirmation is that the market should do the break of structure to the upside in bullish scenario. And in a bearish scenario, it should do the break of structure to the downside. When the market makes the break of structure to the upside or to the downside, it indicates that the market wants to continue its trend. Now let us see the second condition. The second confirmation is the formation of the imbalance candle after the break of structure. The imbalance is a candle which has big body with small wicks. When the market makes imbalance candle, it indicates that there were a lot of buy or sell orders being activated at that price. This candle is called the imbalance candle because after formation of this candle, the market has become imbalanced. In other words, the imbalance candle switches the market's character from bullish to bearish at the time of creation of bearish imbalance candle and from bearish to bullish at the time of creation of bullish imbalance candle into the market. A lot of money is injected into the market, which results into creation of this big bullish or bearish imbalance candle. When the market creates the imbalance candle, it leaves a big gap between the current price and the previous price. Now let us see the third confirmation, which is inefficiency. When the market makes the imbalance candles, it makes the market inefficient by creating inefficiency into the market. When the market creates the inefficiency, it indicates that the big players of the market, which are big banks and financial institutions, have initiated their buy or sell trade into the market. The big players creates this inefficiency into the market in order to trap the retail investors into the market by hitting their stop loss. Here is an example of this type of trap. So, here we have the Euro-Canadian dollar chart on 1 hour time frame. We can see market creating big bullish imbalance candle which created inefficiency into the market. And before the creation of the imbalance candles into the market was moving into the consolidation phase. In this phase, the retail investors are placing their buy limit orders at this support zone and their sell limit orders at this resistance zone. Now, we can see here that the market had gone to the resistance zone, which is why a lot of retail investors would sell the currency pair at this time. But they got trapped into the market as the market made this big bullish imbalance candle which hits their stop loss. Now let us move to the fourth confirmation, which is liquidity and change of character. After the market gives us the 3 confirmations that we discussed previously in the video, we must wait for the market to create the liquidity and then sweep it to the downside or to the upside. We consider liquidity zone creation and liquidity sweep as a confirmation because when the liquidity zone is created into the market, it means that a lot of money is injected into the market. Now at this point also a lot of retail traders would get trapped. Let us see how they would get trapped. So, here we see market making this liquidity zone of equal lows. Now whenever the market would reach at this zone, a lot of buyers would initiate their buy trade into the market and the big players of the market knows this thing. And thus, they will sweep this liquidity zone by pushing the price to the downside. This would hit the stop loss of the retail investors into the market. And after sweeping the liquidity zone into the market, we would wait for the market to make a change of character. When the market makes the change of character, it indicates that the market has switched its character from bearish to bullish during the bullish order block zone and from bullish to bearish during the bearish order block zone. Now that we have learnt the 4 confirmations of a valid order block zone, let us move on to the strategy that you can use with the order blocks in order to make huge profits into the market. So, in this strategy we would use the multi-time frame analysis along with the order blocks concept. We would first mark the higher time frame order blocks and then we would switch over to the lower time frame in order to see if the market makes a change of character or not. And if the market is making the change of character, then we would draw the order block zone from the fair value gap in order to take entry into the market. Let us learn this strategy with an example. So, here we have the Euro-New Zealand dollar chart on 4-hour time frame. We can see that the market is doing the break of structure to the upside, which indicates that the market is in an uptrend, and which is why we would draw the bullish order blocks on our chart. We can see market doing the break of structure, which gives us the first confirmation of creation of an order block zone. Now let us wait for the market to give other confirmations also. And as you can see that the market has made a bullish imbalance candle which created inefficiency. This big candle gave us both the confirmations that we needed. Now let us learn that from which candle should we mark the order block zone on our chart. So, in a bullish scenario, we should draw the order block zone from the previous candle that formed before this bullish imbalance candle. And similarly, in a bearish scenario, we should draw the order block zone from the previous candle that formed before this bearish imbalance candle. Now as we are in a bullish trend in this currency pair, so we would draw the bullish order block zone from the previous candle that formed before this imbalance candle. Now that we have drawn the bullish order block zone on our chart, let us wait for the market to reach at this zone in order to initiate our buy trade into the market. We can see market creating liquidity zone of trend line. And this gives us a higher probability that the market would come back to this bullish order block zone. We can see market sweeping this liquidity zone of trend line to the downside. And then the market reached to this bullish order block zone. Now let us switch over to the lower time frame, which is 1-hour time frame for the change of character confirmation. We can see price doing the change of character as it broke the recent lower high to the upside. Here also, a lot of retail investors gets trapped as they initiate their buy position too early into the market. But we would not do so. Instead we would draw the bullish order block zone from the previous candle which formed before this green imbalance candle. Let us wait for the market to come at this zone. We can see market coming at this zone, and thus, we would initiate our buy trade from this point. We would keep our risk to reward ratio of 3:1. And as you can see that we ended up making up a nice 3:1 risk to reward ratio through this trade. Now let us see one more example of this strategy. So, here we have the Euro-Pound chart on 4-hour time frame. We can see that the market is doing the break of structure to the downside, which indicates that the market is in a downtrend, and thus, we would draw the bearish order blocks only. We can see market making a big bearish imbalance candle after the break of structure that caused inefficiency. And thus, we would draw the bearish order block zone from the previous candle that formed before this bearish imbalance candle. Now let us wait for the market to come back to this bearish order block zone in order to initiate our short trade into the market. We can see market making the liquidity zone of equal highs. And then, we see market sweeping this liquidity zone, which indicates that the market would sooner reach to this bearish order block zone. We can see market reaching to this bearish order block zone. Now let us switch over to the lower time frame, which is 1-hour time frame for the change of character confirmation. We can see market doing the change of character as it broke its recent higher low to the downside. Now we would draw the bearish order block zone from the previous candle that formed before this imbalance candle. We would initiate our short trade from this point. We would keep our risk to reward ratio at 3:1. And as you can see that we ended up making nice profits through this trade. This brings us to the end of this video. So, in this video, we shared the best strategy that you can use along with the order blocks. Now before we end this video, if you found this video useful, then don't forget to like the video and make sure that you subscribe to our channel to never miss out any of our upcoming videos.